In this video, we will talk about using futures data in your favor. Notice this is the ES, and I've been using the ES as a sample. Doesn't matter. We can use the US oil. You can use the Dow. Um, you can use USD CAD, Euro, but and also the gold. This is the gold in the CFDs market or spot market. But let's go back to the SPX 500 or the ES. Notice how the top of the move to the bottom of the move retracement, we did the retracement, Fibonacci retracement, and we are sitting at a magical, beautiful reversal level right here. You notice this is the SPX 500 CFD, and it has only one level of SAL indicator, the substantial attraction levels, and it was used earlier for the long as a support. You don't have, because of the market depth, because this indicator is based on market depth, the CFDs or the spot forex does not have the market depth, the historic market depth that futures has. This is the only advantage for using SAL indicator for futures contracts. If you have a way to get futures contracts or futures data feed, which is exactly the same way, it's a little bit probably going to cost a little bit more, but it's works side by side with futures. I am connected currently uh, um, with futures data feed, and it runs both CFDs and futures. So now let's go back to the ES. Explain the difference with the ES, which is E-mini S&P futures uh, side. You notice there is a major attraction level that showed up right at the top, right here, and this indicates a major rejection as well. So if I put a line on it, let's put the Fibonacci retracement on it, price retracement. Of course, it's white, so it will not show up clearly as the other side, which is the background is gray. But here's the 68%. It's a bit. I made it yellow, the 68%, so you can see it clearly. See how the yellow here, 68% showing up, and it's touching almost here. Point being, folks, they move exactly the same way, futures and forex, as futures and forex or CFDs. Uh, and but with future side, you have more one indicator that trumps, one indicator that will give you more details, which is the SAL indicator. And you see these levels here on the magenta lines, these showing the levels that the market makers are intending to take the market to, the hidden levels that don't show up elsewhere. And by the way, if you have futures data feed, this will not work unless you have Sierra charts. SierraChart is the only charting system at this time that gives you historic market depth. All the other charting systems, softwares will give you intraday immediate market depth that is not doesn't qualify for trading because it will give you the data around the price, but it will ignore all the ones that are above or below. That being said, this is the difference between using this is the advantage, I would say, of using the data feed from a futures broker or futures provider to help you with SierraChart's SAL indicator. Um, if you're interested in knowing, let's say, for example, long-term view for where the Nasdaq is going, for example, the Nasdaq is showing main attraction here. See, this I plotted three major levels of the SAL indicator, and I see three levels of attraction that the Nasdaq might come back to in the near future. See, one, two, and three. This one is the biggest. You see, it's the thickest, the biggest, and there's attraction coming back to this level. On the ES, I showed you the major attraction level is above. Once that is touched, or maybe will be missed, probably, you might see it shifting lower. But the second biggest one is just below. See this one here. Let's look at Canadian dollar, CAD, future side, CAD. You see There is one major one that is right at the price, and there's another one coming down here. These are the two. You can go up to 50 levels in the future side. 50 might give you a lot of levels. They might be busy. But let's examine also the difference between CAD currency versus USD CAD. And remember, CAD in the futures market, Canadian dollar is the main currency on the left, main currency. This is CAD versus US. So it's showing that it's coming down, for example. If I look at weekly CAD or daily, it's showing that it's going to go, there's a chance for it to go up if it goes above this price, or down if it comes below this price. This is, we call this a do or die level. That being said, USD CAD is same way, but completely the opposite. Notice the USD in this case is the main currency. So if I'm looking at the daily chart, it's exactly the same way, but it goes the opposite. Same trading style, same trading method, but goes opposite because the Canadian dollar in this case is the secondary currency. And if I look at one day profile, you see we are at the bottom. The USD CAD Forex spot showed up, the SAL indicator showed up at the bottom, and it's indicating a support, which it worked. It gave you the support. Now it's a bit slower now. It's not the same. This is they go the opposite. So USD CAD and CAD, if I put them side by side, they go opposite. Okay, we got that. But a currency like the pound or the euro, it goes exactly the same way in the future side and in the forex side, because the pound is the pound versus the US, and in the forex side is pound US. Euro is euro US, and in the future side is the euro. Okay, hopefully you get the point. Other than that, I wanted to highlight the difference between the futures data feed versus the CFDs or spot data feed. Thank you.